Hey, good morning, guys. Sorry, I had a technical issue on my end just now. I think I was actually talking for like 10 minutes. And I only just realized I had a technical issue. So I'm back. Thanks to Marcus for pointing that out for me, buddy. Appreciate it. All right, let's go. Okay, I'm going to head over to the calendar quickly and we'll head on over there and we'll get started. Welcome to the midweek workshop, guys. We'll get started here on the calendar, looking at FOMC today. For me, that means I won't be trading New York session, New York AM session, that is. It'll be, in my opinion, lower probabilities from what we see. It's a high impact news event. It's one of those ones that we have every month that has quite a huge effect on the market. So not something I'll be looking to participate in today. In saying that though, generally I will always look for London trades prior to FOMC. There's usually good movement there. And we did see that today during London with gold and oil. So we'll go through and have a look at a couple of trades. We called both trades, we called out two trades in Trade Foundry during London. Gold trade played out perfectly. The oil trade wanted another setup, so that was slightly invalidated, but still the same idea played out. So we'll have a look at that. Morning, Tomic, Jerome, Fayaz. I'm not normally late either, by the way. I hate being late, so getting this started late's a little bit frustrating. Marcus, Mohammed, Dugu, thanks for joining, guys, and sorry for keeping you all waiting. All right, let's head over to the chart. Let me just get that back to where it should be. On the daily radio. Let's have a look. Okay. So we'll have a look at the sort of the daily idea where I think price might run to today, and then we'll go and have a look at the those couple of trades that I took earlier in the week, the Monday gold trade and the Tuesday oil trade, and also these couple of setups from London today. And of course, if there's anything you guys want to have a look at, drop it in the chat, and I'll be sure to answer as best as I can. Just a reminder too, with the FOMC, if you did want to look at expediting any evals, taking that one shot, one kill approach, be sure to head over to Adam's YouTube channel, his day trading realty channel, and he will be running a stream for FOMC. So I've put that link in the chat. Be sure to go and check that out, and you'll be able to see the process and follow the process as well. Okay, so looking at NQ, after the DeepSeek news disrupted the market, price sold off quite rapidly, and then we found support at this bullish FEG, managed to get a close above, and then a retest of that level, and we can see price continuing to expand. Be sure to let me know as well, guys, if the music's too loud or you can't hear me. This is the draw for me. So what I really like about this draw is there's no wick to the high side. So that is a strong draw on liquidity. Thanks, Jerome. I look at this as quite a strong draw. It's coupled with the opening gap as well. So that's where I believe price is moving to. So if we drop down to the hourly, I just want to have a look at changing the state of delivery for a moment. And this is the level that I would be looking at for a valid change in the state of delivery. And the reason for that is because we see a close above these opposing candles with displacement. So we have an FEG aligned here. That is why this, for me, is the change in the state of delivery. Now, for that to be invalidated, price would need to come back and close through that level. Change in the state of delivery, we have the draw. We can run our projections off of this leg here, so our standard deviations. Now, because this wick is quite large, I'm actually just going to use the bodies. The wicks, when they're quite large like this, it distorts the move. And you can see, if we just zoom in a little bit there, price is currently located at the -2 to 2.5. And if we don't see consolidation there, we usually see retracement. So price has reached into this level and doing exactly what we can anticipate it might do. Once we get a close through this level, this -2.5, we can look to see price move to the -4, which coincidentally will fill this gap as well. All right, Mohammed, take care, buddy. I hope everything's all right, pal. So that lines up nicely with the -4 standard deviation. Now we're consolidating, unsurprised by that, as we have the FOMC news dropping in the PM. Sure thing, buddy. Take your time, mate. No worries. Take care of your family. So yeah, so that's how I see NQ at the moment. That's the state of play for me on NQ. If we drop to the 15-minute, you can clearly see this London consolidation. Just this little range, building liquidity either side. And if anyone is going to expedite your evals, hopefully when the news comes at 2 p.m, it just shoots in one direction and you're able to pass some evals. Let's move over to ES. Now ES is already tapped into the opening range gap. Not surprised, because ES has actually been the stronger of the two. You see a nice reaction out of this bullish FEG. Again, expansion off of that. Now, just because we're in this gap doesn't mean we're not going to close the gap either. All right, so let's move to the hourly and see. So for ES, the change in the state of delivery is actually through here. We can see how well price has respected that level as well. We have, it is a small FEG, but there is displacement here. And we get, this is the close through of these opposing candles. That's why this is the change in the state of delivery. And then, as I say, we can see price respected this level and continues to do so. Again, consolidating in preparation for FOMC. We can see that through here. So bullish for NQ and ES until FOMC destroys any analysis, of course. Also, while we're on the charts here, this indicator in the top right hand corner, something I've been working on. The original version of this actually ended up being hidden by TradingView because there were just certain things about when I published the indicator that didn't meet the house rules. For example, the description wasn't descriptive enough, so they hid the indicator. So I'm working on an upgrade anyway, and basically what this indicator is about is using the average daily range. So what we can do is you go into settings and you can choose your look back period. So it defaults to 180 days. That's what I look at. I use 180 days look back period. Basically what that's saying is that over the last 180 days, the average range of each daily candle is around 67.76 points. How do I use that? Well, basically I use that, for example, when we had this huge sell-off on Monday, by the time we got to New York AM, this percentage here, which is a percentage of the current daily move. Okay, so the current daily move is 36% of the average ADR. So when we came into Monday's New York AM session, this was like 300% or something, right? Essentially, if price is at around 80% of the average daily range by the time I get to New York AM, that's saying to me, okay, we've nearly expanded the average daily range already. Where can price possibly go from here? Sure, price can keep moving in that direction, but are we likely to actually see a potential reversal thinking about the way candles open and close? We have open, high, low, close, so price moving back into the range, all right, and vice versa. That's how I'm using it to frame an idea. So obviously with a candle like this, where it expanded 300% before New York Open, I just said, okay, I'm not even going to look at NQ and ES today. It's just not even in the realms of wanting to try and catch something. Even if there was a reversal, I was not interested. And then just makes my job easier. I can just focus on two other assets and look for an opportunity on those. So I'm developing this still. There's still a few tweaks I'm working on. One being a possible option that shows the current volatility, whether it be low, medium, or high. So just a few little things. So once I've got that sorted out and published, I'll make it available to the community, and you guys can use it if you want to use it. And we'll talk. I'm going to do a video around that and how I use the ADR and the 7-hour candles again to frame my trading day. All right, let's have a look at oil. What's oil up to? We've had this expansion lower, right? We've continued to expand lower, and we've come into Monday and a reasonably large expansion. And then Tuesday stayed inside the range, so it's inside bar. And currently today's candle is an inside bar. There might have been a slight sweep, but it looks like equal lows here. For me, my draw is down here. This is where I'm looking. In fact, I'm really looking here, looking at these lows as relative equal lows into a bullish FVG. So until that idea is invalidated with a change in the state of delivery or something like that on the lower time frame, this is where I'm looking for price to go. So whilst that idea is in play, I'm remaining bearish. So let's have a look at the hourly. if we just zoom out a little bit, it's pretty easy to see the trend. You don't really have to do much more analysis than that in this case. It's literally bearish. There's no two ways around that. And we can see that we continue to respect bearish PD arrays. And we'll highlight this one because this comes into play with the CL trade that I took yesterday. Again, as prices moved higher, it's failed to close above opposing candles and has continued to move lower. Again, respecting this bearish FEG, and we may have a similar setup here to this where we reach back up into this premium FEG before we continue to move lower. So that's what I'm looking at on oil, is for price to continue to move lower unless we do see a change in the state of delivery, but I'm yet to see that. So while we're on oil, let's have a look at the, actually let's have a look at, let's go to the 5 minute, we'll have a look at today's London session. So initially, price swept the Asia session high. I'm just checking out, yeah, was it on? Okay. I was just seeing, because we call these out, I try to call these out in real time in Trade Foundry. So we were looking at this as an idea, and if we roll back to here, we're moving off a swing high. Okay, so this is the hourly chart, so I use the hourly to 5 minute time frame alignment. This is the hourly chart. Price was moving from this swing high here, so that's our point of interest, and we were getting this formation off the Asia highs. So this was starting to look valid for a potential short with the session lows still open, equal lows as well. Okay, but as we fast forward, this idea becomes invalid because we don't have the FEG aligned with the breaker. So although we called this out, it became invalidated. Fast forward a little bit, we're well into new London session now. We've got a new formation. Okay, so there's our breaker. Stop hunts through here. There's a swing high, swing low, breaker. So we're looking for price to displace through. It doesn't initially, but we get it here. Now, this is also a Pegasus. We have a single FEG in the leg that swept liquidity, and then we've inverted that FEG. Now, we'll fast forward a bit more because this trade runs away without an entry. So our idea was valid, our idea was right. The draw on liquidity, spot on, but we didn't get an entry. I take two types of entries, market order or limit order. For me, I would have limit ordered this because of where price closed through. It was just closed through a little bit too deep for my liking. It's just gut instinct I use for that. I can't really give you a points or a tick value, because I literally just look at how far prices close through and then just in that moment decide if I'm going to market order or not. So this for me closed a little bit too far through, and a limit order would have been where I would have put in place just at the breaker. In fact, I front run a tick or two when I set a limit order. Sadly, it ran away without us. So Jerome says, love this. Session liquidity away from midnight open, bearish bias, IFVG breaker, so nice. This was a really nice setup. The first one obviously didn't play, but that's okay because it invalidated. We didn't pull the trigger. We can wait. We remain patient. We get our confirmation. We get our setup, and look at the hourly candle. If you look at the breaker, and this is something that Adam's wisdom has shown and taught, that the breaker, Adam being day trading realtor, if you're not sure, the breaker is formed inside the wick of this candle here. That is, we've got high probability. We've got multiple PD arrays overlapping here, and the trade plays out without an entry. That's okay, but the idea, the concept behind it was spot on. So that was, we missed that one today. Now let's go and have a look at, we'll have a quick look back at the trade from yesterday, I believe it was. Here we go. This is it here. This is a great little trade. So if we replay this, we'll move the slider back to here, and you'll see a similar thing with the hourly candle as well. So let's draw out the breaker. This is our breaker here. The FVG, the hourly bearish FVG, is what we came into. There was not much of it left open, but it was still open. Let's go out to the hourly just so we can show you what I mean. And what I mean by there was not much of it left open is that we'd wicked through, but we hadn't closed through. So this FVG is still valid, okay? This FVG is still valid until price has closed through it. So that FVG was my higher time frame point of interest. We swept the previous high. Breaker forms inside the wick, and away you go. Again, this was one that I limit ordered because of how deep the close was through the breaker. I would never market order that. It's just too far through. And look at the entry. It was just a sweet entry. We had one or two tick drawdown. Now I targeted this low. Exactly, Jerome. Bodies tell the story. So this was just a really nice trade. And then price continued to move on lower after that as well. If you know what continuation trades are, you could have taken an entry off of this with another short, stop at the high. You can still aim for 2R. Asia lows, session lows there would have been my draw. That was my draw for this trade anyway, but I took off 2R here. I was only trading I think I was trading 1 mini for that trade, so I couldn't take partials. And then there you go. Wick are the over dramatic people who want to ignore, but they always find a way to disturb. Yeah, I actually do ignore the wick sometimes. You know, for example, let's just say for whatever reason this bearish candle here had a wick up to here. I would actually just ignore that, and I would still use this breaker, because it's just noise. And that does happen from time to time. Not that often, but it does happen. All right, let's have a look at 6E, gold. So our daily price action, we just continue to respect opposing candles. Now you might say, well, hang on, price actually closed through the high of this one, but I'm also looking to see if the 50% level is respected of that series of down closed candles there. And what do you see? Price wicked off that level and move straight back on higher. That's my invalidation level. If price closes through, then that would have invalidated any idea of moving higher. We can see we've continued to move higher every step of the way. The same thing applies here. We respected 50% of that range, and there was a tiny close through, but price immediately reversed. So the other thing there was we swept this low, so we had a higher time frame, so we had a external level there to use to frame the idea that price might move higher. And that remains the same. So we've moved off this level. So my draw is this high here. So we'll see if price moves lower today. Does it respect 50% of previous day's range before continuing to move higher? So let's drop to the hourly. Let's see when we close through these up close candles here, how price respected that level. We don't have an FVG there, so I wouldn't call that a change in the state of delivery. We have relative equal highs up here, price to draw to, and that's the high we're chasing. So if we run our projections off the bodies, the wick's probably a bit deep for me here, but it does project us up to where price currently is located. We can see that we did get a close back above these opposing candles, but we are moving into some consolidation here. Still respecting these bullish PD arrays. This potentially could see a reversal here, but we'll see. We'll need to see a close through this level here. That would be a bearish change in the state of delivery. I'm going to still remain bullish on gold. So let's have a look at, while we're on gold, have a look at today's trade. Okay, so this was our breaker. And if we go out to the higher time frame, the hourly, we moved into a bullish FEG. Already swept the Asia low as we move lower into the bullish FEG. This is our breaker and we got a nice clean move through. Now this candle didn't quite close back inside the range, which is what I do prefer to see. So I do prefer to see this close back inside the range of the previous candle. But we still had a nice reaction. So this would be a traditional unicorn without really any other concepts overlaid. And you would have had to have been quick with this one or market ordered in. This is definitely a trade I would have market ordered into. We closed 2 ticks through the breaker. For me, that's a market order. Don't muck around with limit orders. You just want to get in the trade, because by the time you might have got your order set, you could have missed the position. Price opened lower and then ripped higher. Now where's current price is there. So I just want to show you, I don't know if you guys know this little trick with TradingView. Yes, yeah, exactly, Joan. Yeah, IFVG again. So there's another opportunity to get into the trade a bit earlier. So you have an inversion here. This candle closes through this FVG. You could even market order in on this if you're game enough and you have the experience. And the draw was the Asia high. That was the draw I was looking at. We had equal highs, clean draw and liquidity. So just looking at the position tool, when I set limit orders, this is how I do it. Position tool, right click, create limit order. And I'm not signed in, bear with me. What's going on here? Oh, okay, I see. Okay, sorry about that. I was logged into the wrong tab, but anyway. All right, so the little trick that I do, this is how I use TradingView when I put limit orders in. Create limit order, 1 unit, for example, and then I will just close that window. Okay, so set your units, your risk, take profit. It's already going to be at the level of the position tool. Okay, make sure that your risk aligns, so this dollar value aligns with your risk as per your trade plan, and then you just close the window. That's it. As soon as price closed through this breaker, if you had this already set up on the chart over your trade potential here, you just hit buy. That's it. Hit buy and it'll place all the orders for you. And that's how I set my limit orders. So that was quite a nice trade today through London, and you can see that we've come back down and now we're consolidating. Just ugly. This is why we won't be trading FOMC AM. JKB, thanks for joining, buddy. All right, well, we're going to look at Monday's trade. We'll have a quick look at that. Just so you can see how I frame the idea. So that was... Here we go. This is here. Yeah, that was it. So we had a reversal at the highs here. All right. So we had a reversal here confirming that we're moving to a sell model, and as price continued to move lower, price continued to respect these up close candles. So each time we put in a series of up close candles or a simple up close candle, price came back to test it and then moved away again. So that's the basis of the entry I took on Monday. I was waiting for a close through these up close candles, and what we can see here is how price respected the 830 open. So 3 times price tried to push through 830 and was unsuccessful. So I wanted to see a close through this series of candles here. Once we got that, then I had I run Top Step X, and then I also run a trade copier in NinjaTrader with all the other accounts. So on Top Step X, I was able to get a limit order set, and then on the other accounts, I had to market order just because I wasn't quick enough, so to speak. But I pretty much got the same fill on both. So this was the setup, and then just target 2R. Coming in, and yes, it was before 9:30 open, but I had the draw. London lows was the draw on liquidity, and that's what I was looking for price to reach for. And you can see we get tapped in, just a beautiful little tap in, and then 9:30 comes and 2R. So it was a great little trade as we came into the New York Open. I do look to trade from 8:30. So when the kill zone starts is when I start looking to trade. So that was the gold trade. So far this year, I've taken 9 trades, 6 wins and 3 losses. So I'm pretty happy with that so far. Let's have a look at Euro USD on the daily. So here we can see, I had this marked up from yesterday, insight to order flow. This candle closed back inside the range. It's a failure swing, wasn't able to move above, but it also respected this bearish FEG. We can see price was unable to close through, and then we get price moving lower. We've then inverted this FEG, and that's going to continue to see price move lower in my opinion. This is the draw, this swing low. So remaining bearish for 6E. Still working on getting the information right for the ADR indicator, because the average ADR for 6E is 0.006 or something like that. So it's rounding up to 0.01 at the moment. So I just need to work on that as well. If you're wondering why. So that's just something I've got to fix on currency futures. Let's have a look at GBP. So similar idea here actually with GBP. Although price did close through this bullish FEG, the next candle closed back inside the range. Price came down, respected 50% of this Friday's range, and is still testing that level at the moment. Swept previous day low, so potential here we could, move in with our IRL to ERL concept inside a daily bullish FEG. This would be our draw. Let's have a look at Bitcoin. I saw a post from someone I respect dearly, who is amazing in the crypto space. She taught me quite a bit when I first started to learn to trade, but she was looking to see price reach all the way back down into the $75,000 range or $73,000 range. I don't want to see that happen. I want to stay optimistic, because that will hurt altcoins, obviously. And I'm really hoping to see a good bull run this year. So we'll see what happens. Obviously, it's still early days. So having a look here with Bitcoin, we got a nice reaction, really nice reaction off this low here. Strong buyer's wick. Yesterday, we see price respecting the bearish FEG, which I was anticipating, and then looking at the 50% level of this large buyer's wick to hold, and we did. So now will be interesting to see if we can get that push higher and push through, close through this bearish FEG. We have opened with 0 wick to the downside, so that could be that potential draw as well. So that would be the bearish idea, would be to sweep this low out here, or this opening price. All right, guys, feel free to throw anything in the chat. We'll just open the chat up for a couple of minutes, see if there's anything you want me to have a look at before we wrap it up for today. We will be streaming in Trade Foundry Discord, link in the description this morning. And we can continue our conversation over there. That will be kicking off around 9:15 Eastern Standard Time. Thanks. Thanks, Jerome. Thanks for tuning in, buddy. I appreciate you joining, bud. Yeah, I think there's a lot of value out of breaking down winning and losing trades, which is why I actually really enjoy sharing that information. Yeah, definitely more cautious today, Ali, 100%. In fact, I'll be sitting on my hands for New York AM session. And unless you're choosing to one shot, one kill, that'll be the only trade I'll be taking today. But I'll be sound asleep by then. Excuse me. Yeah, we're pushing that 1,000 subs, guys. We're nearly there. Thanks for mentioning that. We're at 926, so we're so close to 1,000 now. I'm desperate to get to 1,000 because I want to give away these two 50K My Funded Futures accounts. They're sitting there waiting, but I'm under strict instruction that I cannot give them away until we hit 1,000 subs. I really appreciate My Funded Futures support. And as soon as we hit that 1,000 subs, we will be launching that giveaway. So please share the channel far and wide, guys. Yeah, you hit the nail on the head there, Marcus. The losses usually teach you a lot more. Sometimes you want to bash your head against the wall once you realize you've analyzed the trade and you should never have taken it. Done that plenty of times. Can we check CL from yesterday? Time 4:30, 5-minute chart. Let's go have a look. 4:30 a.m. I'm assuming. Four thirty. This was the trade here, Tommy? I just want to make sure that I'm looking at the right thing. Okay, cool. So this would have been your breaker. Cool. Looking for Asia low for the draw, equal lows. So let's push out to the hourly. Inside a rather large hourly FEG. Swept the previous hour high candle. I think the only thing that really stands out for me, to be honest, is that, well, I think it was a bearish day yesterday. Oh, it was actually closed bullish, didn't it? Is we're in the inside, like we're around the midpoint of the range is probably what I would be saying here. So the range being the Asia low to the London high. And that's not somewhere I'd want to be looking to take a position. I'd be looking more to take that trade from the high. The other thing here is we're not, this hourly candle, which is this one here, which is where that swing point is not at a point of interest. So the high was, but the candle that you're actually using for the sweep didn't actually sweep into a higher time frame point of interest. So that candle there, the sweep needs to be into an FVG or a swing point. That's what I'm looking at. So we're in the middle of the range. I want to be trading from the bottom of the range or close to, or the top of the range or close to. And then the other thing is there's no higher time frame point of interest. Yes, I understand that the previous candle moved from a higher time frame point of interest, but the candle that actually formed the sweep was not into a higher time frame point of interest. So that's probably the two takeaways from that one, Tomic. Well, if you're going to trade this morning, guys, before FOMC, be safe. Make sure it's an A+ setup. Like I said, I won't be trading, but we're all individuals here, so you've got to stick to your own plan. Particularly for me, coming off the back of a couple of wins, I don't really feel like giving any money back today when it's potentially lower probability conditions. So you're welcome, Tomic. All right, guys. Well, we might wrap it up there. As I say, we'll be over in Trade Foundry a little bit later on this morning. So feel free to join us over there. It probably won't be the longest stream today, just on account of being, the AM before FOMC. So, but we'll hang out in there for a little bit. If there's any questions you want to bring over there, feel free to do so. Have a good morning, guys. I appreciate you all for tuning in. Help me get to that 1,000 subs so I can give away these 50K accounts. I'm really excited to do that. So make sure to subscribe to the channel and give the video a like as well, guys. All right, take care. Bye for now.